I recently found out about this new supply and demand secret, or whatever you guys want to call it, but it has improved my trading by so much. I wish I found out about this new secret, or whatever you want to call about it, earlier, and I would have been so much further. Don't get me wrong, there is still a lot of testing to be done with this, and I have taken 4 trades with this new change, and I've had a 100% win rate with it. But I do know that is going to change once I start taking even more setups with the new change. So it's not going to stay on that 100% win rate, but we are looking really good. The results have been speaking for themselves, and it is just so much better than regular supply and demand. What I mean by regular supply and demand, I mean how Doyle Exchange trades supply and demand. I trade exactly, or I used to trade exactly like him. He's also made this change, but I don't think he's like too into the change. But I like the change personally now, and I'm gonna get into it even further and explain all my rules with this new change. But yeah, the results speak for themselves. I'm sticking to this change now, and I'm staying with this because I actually see this being way more beneficial than regular supply and demand. Regular supply and demand is 5 minutes supply and demand, getting in at break a candle and holding for 1-to-1, or maybe a little bit past 1-to-1. But I have completely scrapped that. I do not take 5-minute supply and demands anymore. This is just a regular 5-minute demand setup. But we're going to break it down a little bit further. So normally, if you trade like Doyle trades, you would have got in at break of the candle, you would have had stops below the wick, and you would have looked for your 1-to-1. A few people have already seen this trade because I have posted it on YouTube. I will put it up now, and you can go watch me take this trade live. But we're gonna look at it on the 1 minute, and we're just gonna see how the 1 minute plays out and where we would have gone in on the 1 minute. And we're going to look to scale zones. I'm going to teach you how to scale the zones down on the 1 minute as well. So we just look for regular 5-minute supply and demand. But with this new secret, or this new confluence, whatever you want to call it, we take that 5-minute regular supply and demand and we try and scale it down to the 1 minute. By we scaling it down to the 1 minute, we are looking to get into the demand quicker and aim for a higher RR while our stop loss is going to be smaller. That is pretty much taking it off the 1 minute. That is what I've been testing. 7 rules I have for trading 1 minute supply and demand, or getting in on the 1 minute. The first rule I have is that the supply and demand has to be inside of the 5-minute zone. So the 1 minute supply and demand has to be inside of the 5-minute demand. Like, we can't have a 5-minute zone. This is our 5-minute zone. We need a 1 minute supply or demand, or well, a demand in this case, to be inside of this box. It cannot be, we cannot have a 1 minute demand like that, half in and half out of the 5 minute. It has to be inside of the demand. So it has to be something like this, maybe even it was like that, or maybe even if it's down there. That's how the 1 minute has to be no matter what. That is a rule that I have, and I'm not going to be taking ones where it's outside or some other stuff. It has to be inside of it. The second rule I have is that the 1 minute supply and demand has to be high probability. It has to have a gap attached to it. I'm going to go back to the 1 minute just to show you guys what I mean. That this zone right there, that is a low probability zone. You can see that it's still got a tap into that and rejected up and won, but that this first demand here is low probability. So in order to make this a high probability zone, you had to draw it over 2 candles and it had a gap attached to it. So second rule, it has to be high probability. The third rule I have is that it has to be the lowest supply or demand inside of the zone. So sometimes you're going to get 5-minute zones. This is our 5-minute zone. And then you might get a 1 minute zone at the top of it and at the bottom of it. I'm going to go over a proper example, but we are looking to only take the bottom one, because if we take the top one, there is a risk to it, because the lower zone has a gap attached to it. It means the market needs to still fill in that gap. If you know how the market moves, it is always going to fill in gaps. The market has to fill in every single gap. We don't know when it's going to fill in, but the market has to fill in gaps. So if we're taking the top zone, then the market isn't filling in the gap here. And that is a risk that this top zone could give break a candle and then lose. But we are looking to take the bottom zone because then we know the market filled all the gaps inside of that supply or demand, and then we take it off a break a candle. But sometimes you are going to miss trades if you're waiting for the bottom zone and it only taps the zone, the top zone inside of the 5-minute supply or demand. And I'm going to go over an example of that right now. I drew up this beautiful diagram for you guys just to explain what I mean by a 5-minute zone and then it having 2 1-minute supply or demands inside of the zone, depending what the 5-minute is. So this is a demand for this example. So the box, the blue box is the 5-minute zone. That we know that the blue box 5-minute zone. Then the first 2 white lines are actually, let's do this. I'm gonna make it even easier for you guys to understand. Let's draw it like this. Boom. Okay, this we're gonna change the color to. Let's change it to like yellow. So that is the first 1-minute high probability zone inside of the 5-minute zone. You see it's inside the box, inside of the 5-minute. Then we could have another high probability demand inside of the box as well. Inside of the 5-minute, we're going to make this one, let's make it green. You can't really see it. Let's make it red. Okay. So the first one is the yellow one, which you could have inside of the 5-minute zone. Red is the second one. You would want to preferably wait for the second one. Personally, when I see this, I'm waiting for the second one. I'm waiting for the red one to get tapped. Because even though this is the yellow one is a high probability 1-minute zone inside of the 5-minute, there is still gaps over here that need to be filled. And the market could, just off of the yellow zone, it could push up, give a fake out of break a candle, and then push it down to come fill in these gaps here and then push up. That is why you want to wait for the lowest one inside of the 5-minute zone. This is a 5-minute demand, and there's 2 1-minute demands inside of that. You want to wait for the lowest one because gaps need to be filled. Sometimes it actually is going to win off of this yellow zone. Sometimes it's just going to come there, give you a break a candle, and then this one's going to win, and we're not ever going to get down to this red one. And even if we get down to this red one again, I am not taking it again then, because it already won off the yellow one. So if it wins off the yellow one, forget about this demand. We missed out on it. But if it gives a fake out and then comes back down, just know I'm getting in on the red one if we get break a candle. Just know that. We are looking for the lowest one inside of the demand and the highest supply zone on the 1-minute inside of the 5-minute zone on the supply. So just know that. The lowest one on a demand, highest one on a supply. Always has to be like that because gaps need to be filled. The next rule is that you want to give your stop loss a little bit of room to play out in on the 1-minute. On the 1-minute entries, you would usually put your stop loss on the 5-minute entry right underneath the candle, right underneath the wick or the candle. But on the 1-minute, I've back tested it. You just want to give your stop loss just a little bit of space between. In my opinion, it honestly just depends on you. You can give it between 0.5 to 2 pips space just to play out in, because some trades like to do this. It likes to come all the way right down here and then only push up. So you've got to be careful of that. And I've seen it happen quite a bit. So I'm not cutting losses on the 1-minute, but you also just want to give your stop loss just a little bit of room just so the market can breathe out. Because on the 1-minute, we're going up and down constantly. There's a lot of movement and you need to let your trade just give it a little bit of space just so it can play out. So give your stop loss a little bit of space. The next thing I want to go over, which is the next rule I have, is that the 5-minute zone has to look like a good supply or demand zone. In this case, we're looking at a demand. This, I would have taken this off the 5-minute. Personally, this zone that I have marked up right here is a really, really good demand zone. We had a really nice major breaker structure. We are below the 200 EMA. I don't have the 200 EMA on right now just so it looks a little bit more clean. But we were below the 200 EMA and this zone was high probability. We had that big gap to get filled. I would have taken this off the 5-minute. But in this case, we could have scaled this to the 1-minute. So I took it off the 1-minute. But the zone has to look good. I'm not going to be looking to take like a low probability zone like this, even if it's got a 1 minute high probability. I'm not looking to take like some supply and demand on the, or like mark it up on the 5 minute and it's like from long ago, even if it has a 1 minute zone inside of it. I'm looking at the most recent 5 minute supply and demand. It has to look good. It has to have a breaker structure. We got to be following the rules. So it has to look good. Then we have to be able to scale it to the 1 minute. Just like you saw, we had it scaled up on the 5 minute. Now we are on the 1 minute. Now let's look at it. The lowest demand inside of this demand, inside of the 5 minute demand, is this candle right there. So we marked it up. Boom. That is our 1 minute demand. And in this trade, I actually took this trade, and you would get in on break of the candle. You'd give your stop loss a little bit of space to breathe. Like, look at this. This is a tiny stop loss. What is that? 1.3 pips. You could even put your stop loss like even almost at the bottom of the zone, and you look for your 1 to 2. The next thing I want to say is that the minimum I am going for, I'm going to go to my spreadsheet now as well. On the 1 minute entries, the minimum I am going for is a 1 to 2. I'm going to move over to the spreadsheet and then we're going to come back to this example because I have more to say. So we're just going to look, okay, what have I done? Let me just go, okay, whatever. Let's look at this. This is my spreadsheet of all the trades I've backtested, and this is only from recently. I have more that I've backtested on FX Replay, which is more examples here, which I'm still gathering data on. But let's look at this. Is all from recently. This is from like the beginning of Feb till March, pretty much. Just look at we just looking at this column. We're just looking at the runner. Don't worry about anything else. You guys can pause and read it if you really want to. But this is trades I've actually documented. Just look at the minimum that we go for. All of these are off the 1 minute. All of these setups right here on the spreadsheet is off the 1 minute. We took it off the 1 minute. It was a 5 minute zone, had a 1 minute, and we got in that break account on the 1 minute. Just look at the risk to reward. And then once you see all of these numbers, look at which one occurs the most, which one you can get most often. In my opinion, I see that you can constantly get a 1 to 2. Even if it goes for a higher RR, you know you can still get that 1 to 2. From what I backtested, either this goes for a 1 to 2 or it loses. If you're not getting a 1 to 2, it's most likely going to lose. There is some cases where it just goes for like a 1 to 1, but personally, I'm going for 1 to 2s on 1 minute entries. Just look at the results. This is small. This is only like 20 trades, but this is from recent. This is recent data. Just look at that. The most common thing that you can get is a 1 to 2 risk to reward. That's why my minimum is a 1 to 2. Sometimes I could look to take it even further. If there's gaps or liquidity we could take it to, I will look to do that. But my minimum is a 1 to 2. No 1 to 1s. I'm going for a 1 to 2, and it's been working. So we're going to continue doing that. But we're going to go back over to the setup that I was showing you because I got another thing to say about this. So as you can see, we got the 5 minute zone and then the 1 minute scaled inside of it. But as you can see, the 1 minute hits a 1 to 2. It actually goes even further. I think it hits, yeah, a 1 to 3. So this setup hits a 1 to 3 off of the 1 minute entry. But if we go back to the 5 minutes, on the 5 minutes, we're just going to ignore that. Let's say we took this demand off of the 5 minutes, off of the 5 minute breaker candle. That would have been our breaker candle. We would have looked for a 1 to 1. Just look at this. You would have gotten breaker candle and then stops below. You would have gotten breaker candle and instantly faked that. And there was people in the Discord who took this setup on the 5 minute breaker candle and I took it on the 1 minute breaker candle. I won and they got faked out. They lost. So this 1 minute entries is going to get you in quicker or a lot faster. You're going to get you into the trade faster than the 5 minute breaker candle because the 1 minute breaker candle was literally like somewhere down here. Maybe a little bit higher there. And then our stop loss was literally only like 1.5 pips. But let's see the stop loss on the 5 minute. On the 5 minute, we would have had a stop loss of 4.8 pips, which is still pretty small. But on the 1 minute, we had a 1.5 pip stop loss. That means we could have literally gone for a 1 to 2 with ease. Because it's GU. GU usually throws like 6, 7, 8 pips when you're taking it supply or demand. And that means we know we can easily get 3 pips, which is the 1 to 2 on the 1 minute. That's why The 1 minute it's just amazing recently. This is optional if you want to cut the 1 minute entries. I do not cut them personally. I've already said this. I don't cut them unless it's like right by my stop loss. If it's right by my stop loss, I'll try and cut it by like a pip. Pip before it hits stop loss, maybe a pip and a half, I'll close the trade. It depends how big the stop loss is and stuff like that, and the momentum. But most of the time, I'm going to let it either hit full stop loss or full take profit. No in between. No closing at break even. No cutting miles. These are just the 7 rules that I consistently look at every single day. And I'm telling you guys, entries off of the 1 minute. I don't know why people didn't see this. I wish I saw this quicker. I wish I learned about this way sooner or way earlier in my trading journey. Maybe like last year, I wish I learned about this. We would have been up so much more. Because the 1 minute, the 5 minutes, break a candle, and the 1-1 is just not working. It's not doing justice. It's not giving us the win rates and the type of money we need to be consistently profitable. Because taking 1-to-1s, you have to have a really high win rate percentage to be profitable of taking 1-to-1s. But now taking 1-2s off of the 1 minute, we are consistently getting 1-2s now. And just overall, even if we take we take 1 winner and then 2 losers, and then we're only at break even. But if you take 1 winner on the 5 minutes off of and going for 1-to-1, and you take another 2 losses after that, you're down 0.5%, depends on your risk. That's why taking 1-to-2s is just so much more beneficial. Everyone knows it's more beneficial. You want to be catching constant 1-to-2s, not 1-to-1s. You want to be catching 1-to-2s, 1-to-3s, and stuff like that. And you could actually be going for 1-to-3s off of the 1 minute as well. It just depends how good your entry is and where you decide to place your stop loss. I give my stop loss a little bit of space just to breathe. I put it a little bit below the candle, the wick of the candle, and I just let it breathe. But if you want to put it directly underneath the candle, you can easily get 1-to-3s consistently. And I just thought I had to share this with you guys because this has upgraded my trading an insane amount recently, and I know this is going to be really good for the future, especially on the 25k live funded account that I have. So yeah, I'm excited. I'm excited to see where the 1 minute takes us. Like I was saying, I wish I learned about it earlier. But this is what I'm going to be trading from now on. I'm no longer taking only 5 minute zones. It has to be a 5 minute with a 1 minute inside of it. If it does not have a 1 minute, I'm not looking at the zone, no matter how good it looks. I've been getting faked out way too much on the 5 minutes alone. So 5 minute plus 1 minute supply demand, and we're good. That's what I'm taking. But hopefully you guys learned something. If you got any comments or questions, put in the comments, DM me on Discord, follow the Instagram, subscribe, like, and yeah, I'm gonna see you guys in the next video. But make sure you guys keep grinding, keep getting to the next level, and I'm out.